Hey guys, Mike here. So June 30th is right around the corner, and this is when the eviction / foreclosure moratoriums will be ending. And so you're talking about a couple million houses that could be foreclosed on and millions of people evicted. So this could create a problem for the stock market, the real estate market. But the good thing is there's a saving grace, I think, in all this. Kind of a saving grace, and then also a way that screws middle class again. And I'm going to show you both of those, okay? So let's just go ahead, not wasting more time, get right into it. And if you just go on Google, you'll see all of these articles coming out in the last week about how Goldman Sachs, BlackRock, and other hedge funds are scooping up not only single family homes, but they're buying entire subdivisions. And one of my favorite title articles was, if you sell a house these days, the buyer might be a pension fund. And in Texas, there's a subdivision called Amber Pines at Foster's Ridge. The whole subdivision was bought by a firm named Fundrise. And you see the major players here. You got Imitation Homes, which is backed by Blackstone Group. And they acquired 696 homes for $233 million worth of homes, and as part of a US $1 billion acquisition target in 2021, so they got a ways to go. And you can see you have many others here going down the list. They do not stop. And of course, you say, well, how is this unfair to the middle class? Because who's looking for houses right now? What kind of houses are they buying? They're buying houses that middle income, Jesus. And so you're probably saying, well, how is this unfair to middle class people? Well, look who's looking for houses right now. Most likely it's going to be people in the middle class, and look what kind of houses they're buying. Single family homes, regular subdivisions. So we're having to compete against them, and they're paying 20 and 30% over market from a lot of sources I read. And so obviously, who are you going to offer the house to first? Somebody who bids 20 and 30% over the value of the house, or somebody who's bid market? Of course you're going to go with the one with the biggest bid. And so especially if they have enough money, which me and you don't, to buy entire neighborhoods, it's just a whole different story, okay? And so also the other thing this does, it makes housing prices go up even more, okay? So look right here. Look from April 2020 to April 2021, and look at the price increase right there. I mean, that's almost 12.5% in a year for single family homes, 10% for condos, actually about 7% for condos. But of course we know, as I've covered many times before, the building materials are through the roof, so that's also adding to this as well. And so, and a couple other reasons, and it's not the same in every area, which I'll show you. And so the saving grace part of this is, though, that one, if a lot of houses start flooding the market, and remember it's going to take a while, 4 to 6 weeks for evictions probably, 8 to 14 months for foreclosures, that kind of thing. But when it does, it looks like they're going to be scooping them up. Two, if they're actually scooping up the houses like this, they must not see a housing basically crash coming, which I can't imagine that would happen now. But if it did, who knows? But I can't imagine they're going to be buying these houses at these prices for a housing crash. On the other hand, they could, because they know if it crashes, guess what? Their value will come back eventually, what they bought the house for, but they'll also make a ton of money on the rents because they'll be able to raise the rent. So it's kind of a double-edged sword when you're looking at it in that sense, of course. But, it could make the market look at June 30th and say, what's the big deal? People are going to buy these things up, not only them, but us, because everybody's looking to buy a house if you can afford it now, okay? And maybe, just maybe, it drops the price some. You see, usually when the market gets flooded like that, then, you see a price drop. But I think it's going to be pretty short, and I can't imagine it's going to be that big. What, 10% maybe? And so you got to think about it like that. The good thing is things aren't looking as bad as people seem to make them out to be. And, if you look at this data right here, this is from April, of course, and it says, delinquency rate down 7.1%. The national delinquency rate improved again in April, falling to 4.66%. And it says at current rate of improvement, delinquencies could return to pre-pandemic levels by year's end. And then if we go on to the next one here, you can see this is the national delinquency rate, first lien mortgages. Remember, they could have a second mortgage. So the delinquency rate has dropped dramatically down all the way from 08. You hit a bottom and right before the crash, then spiked, and then you see how it's coming straight down. So this is a good sign for the housing market, of course. And then looking at, this is the big one, the mortgage delinquencies by severity. You want to look at the 90+ days. That's the one people are really worried about. And you can see, obviously it ended up spiking 2020, and it's been kind of steadily declining somewhat, so it is coming down, which is a good thing. And that's where I think you get around 1.8 million houses, I believe, or mortgages right now are 90+ days delinquent. And like I said, it's not the same in all area, okay? And plus, and of course, like I said, it's not the same in all areas. And so severe delinquencies, you're looking at Las Vegas, #1 by a mile, because April 2021 actually increased 5.8%, actually increased by 4.6% to 5.8%. Miami second, New Orleans third, Orlando, Houston, a lot of southern places here we're talking about where the real estate is not cheap. And if you look at scheduled forbearance plan expirations, there it is, June 2021. Then next month, you're gonna have a boatload over 600,000. August, have over 300,000, and it declines from there. And so as you can see, the data shows those 90+ day delinquencies trending in the right direction, which is down over time here. It's still a lot of foreclosures, but as you can also see, not all of these moratoriums are gonna end at the same time, and the programs and certain states are doing certain things as well to draw this out. And I think it was Wells Fargo, somebody said they're not even going to start evictions until 2022. And so this is going to take time. The evictions will be much sooner. You'll see a lot of houses on the market, which should hit. But then again, you know, the question, are they going to sell those houses, or are they going to try to fill them up with renters again? That's the big question. And so, you know, I can't imagine this crash in the housing market just because you got plenty of jobs out there to be had for people to make money with. Demand is high. Hopefully building costs come down, so that will hopefully stabilize the cost, which should actually improve demand because it's been kind of lingering a little bit here lately. And as far as the market, you know, how are they going to react? It's kind of funny because when this hits on the 30th, and I'm sure you'll see all the news headlines popping out, that, you know, usually from that time into 4th of July holiday, stocks go up on a little bit of a run there. And so we'll see how they play it. Another reason I think hedge funds and Goldman Sachs have been getting into it, they've been buying these houses for years, but especially now, and they're trying to get all these houses bought up this year because they're gonna make a killing on rents, because rents go up when bad things happen. Okay, that's what happened in 08. They raised rents when people were getting kicked out of their houses right and left. They'll do it again. So if you own a rental property and your tenant's getting ready to move out, you know, you can probably raise that rent up a lot. You ought to check on that. So anyway, I hope you got something out of this. I know everybody's talking about it, so I want to get it out there to you. Hit the like, subscribe button if you did. If you want to account with Webull, hit the link down the bottom right there. You get a couple free stocks. We get a free stock, and we appreciate your support the channel. And use that affiliate link down the bottom of the description where you can earn up to $250 of free Bitcoin just for opening an account with BlockFi, depending on your initial investment, and earn interest back on your cryptocurrencies, which is what I currently do, and even apply for the ever popular BlockFi Visa credit card, where you'll be charged no annual fee and earn up to 1.5% back in Bitcoin for every purchase. And they have eliminated the foreign transaction fees, as well as for the first 90 days you'll earn up to 3.5% interest in Bitcoin on your purchases. So can't really beat that. And you guys have a good night, and I'll see you tomorrow.